Hello everyone, welcome back to POA for you. My name is Leroy and today I'm going through the Specimen paper 2021 for the NA levels, paper 2, question 2. The topic's on non-current assets and I hope you find this useful. So let's get right into it. Question has multiple parts. Part A asks us to book the transactions for this above statement where Haziq's bought a motor van, 7,300 on credit. So standard journal entries, right? Journal entry question. So this would be debit motor van, because motor van is an asset, and if an asset is debit in nature, and if the asset goes up, then you debit the asset. 7,003 and credit other payables, EXE motors. Now 7,003. Now, like I said, motor van is a fixed asset and that's debit in nature. That's why we are debiting it, as we got additional fixed assets as a result of this purchase. We credit other payables because other payables is a liability, and when you buy on credit, you create a payable. And this is a motor van that is used to facilitate his business. This is not something that he's bought to sell. If he's bought something to sell, he's in the business of buying and selling motor vans, and he's bought motor vans, then this would be trade payables instead of other payables. But because this is a motor van and he's in the business of carpentry, so buying a motor van would result in an other payable account that's created for EXE motors. Okay, and the narrations would be being motor van purchased on credit from EXE motors. Okay, great. Now, the second part asks us to explain what's capital and revenue expenditure. Now, basically, capital expenditures are expenses that or money you use to buy something that is more long-term in nature. So like a motor van that could benefit you not only for this, or the business, it could benefit the business for not only for this financial period, but for next year, for the following year, etc. So it's got this long-term kind of nuances to it, and it helps generate revenues for the business, because Haziq in this case could take the motor van to run different errands, to solicit new business, and to help operate the business. So I would describe the capital expenses as money used to purchase fixed assets, which could be used to help generate revenues for the business in current and future accounting periods. Revenue expenditure, on the other hand, it's solely for that particular year. So if you spend the money on something, it will only help you help the business for that particular year to generate the revenues. As an example, this would be things like rent, like utilities. You pay the rent for the month, and that's it. It helps you generate the revenues for the month, for the year. It won't help you generate the revenues for the future years. So it has that different nuance than capital expenditure, and here I've described it as money is used to purchase that item or services that's meant to help generate revenues for the current financial year. All right, and sometimes with these kind of questions that are qualitative in nature, if you have doubt and you can't find it in your textbook or your study materials, Google it. There are plenty of resources out there, and if I were to open Google and type in capital expenditure meaning, right, it tells us money spent by the business to acquire, maintain fixed assets or buildings, right? So it's long-term in nature, and you can have so many different types of answers, and it just helps you understand the concepts a bit better. Now, going back to our question. The next thing we are supposed to do is to, in this table, determine whether each of it is capital or revenue in nature, right? So I'm going to copy this table over and I'm going to say, all right, so what are we thinking now? We got to think whether each of this item can benefit the business for 1 year or for many years in the future, right? So diesel for motor van. If you put diesel in the motor van, it's going to be likely short term, right? Because that motor van can last you, can help you travel for what? 1 week or so, depends on how much you travel. So I would consider this a revenue expenditure. Painting the business name on a motor van. Now, painting this year, it would mean that this business name and this advertisement on your motor van would benefit you not only this year, but next year and future years as well. Unless you're really using poor quality paint, then the paint will run off, but I doubt so. So I will consider this a capital expenditure. Motor van service, right? So as to make sure that the motor van runs smoothly and stuff like that. And with motor van, normally, if you use it often, you got to bring it for service every 6 months, every year. So this is only going to last you short term, and I'm going to call it a revenue expenditure. Motor van insurance is the same thing. You pay insurance annually, usually, and even if you don't pay it annually, you pay it maybe every month or 6 monthly, so it's short term in nature. So I'll call it a revenue expenditure. So that's it. And last part of the question is on materiality concept, right? Now, materiality theory is it's a matter of perspective and size, right? So is $1,000 material, and then you start material. You would ask the question: material as compared to what? Material as compared to $10 million? No, it doesn't sound material, because that $1,000 compared to $10 million sounds like a very small amount, right? So the materiality theory considers really the size, the relative size of the item that you are talking about, and to see whether if you have an error in that size that you're talking about. In this case, I gave you $1,000 as an example, whether it will influence decision making differently, right? So a statement that I've prepared here is it considers the relative size of an item and assess whether the omission or error could have a significant impact to the correctness of the financial report that we are reading, that will make us make a different decision. So that's the whole concept of materiality, right? If I told you that this motor van that Haziq's bought was not $7,300, was $7,300.50, but they recorded it at $7,300. Is this significant? Maybe not. But if I told you that this motor van is actually $17,300 instead of $7,300, oh, that's a big amount, right? That's material, because if it's $17,300, then the person approving Haziq's purchase may think otherwise, may think that maybe I don't approve buying this motor van. So that materiality concept is tested here, and this is an example of what it is. Well, I hope that's it for today. I hope this video has been helpful. I would urge you to try this yourself and see whether you come to the same conclusion. And if not, you can rewatch this video. And once again, if you guys have any questions, post this on the channel. Post the questions on the channel, or email me at poaforyou@gmail.com. My email address is always on the top left corner of the pages that that I take this video on. So feel free to reach out. Thanks for watching. Again, it's always a pleasure doing these videos, and good luck.